because the resistance is going to depend on where the line is. So when I see this bar here getting up here to resistance, this is where I'm going to start my count. Now it's also important to realize that when you're counting backwards, you want to make sure that you're keeping track of how far away from the resistance area your eventual buy or sell point gets. This is what I mean. If I start my count on this bar, I'm counting back 1, 2, 3, and my low is way down here. Now if I'm going to go short there and my target's here, that's just crazy, because my stop's going to have to be somewhere up here. So I've got to keep track of where the low is. When I count, when this bar closes and I count back 1, 2, 3, again the low is still down there, way too far. This bar here, 1, 2, 3, low is still here. Count this bar, 1, 2, 3, low is still here. This bar here, 1, 2, 3. Now I've got a low here, but again I've got to keep track of where that is. Let's go ahead up to resistance, count down, 20 pips. That's just too far. So at this point I wouldn't be looking to trade as the market breaks below this low, because it's just moved too far, especially considering that this entire channel here is only about 50 pips. So you got to remember that if you're already giving up 20 pips, that's just way too much. So what I might do is start tracking the lows and trade on a little dipper retrace, which means going short here at the 618 level, or going short here at the 786 level, depending on the momentum. So you can see here, had you gone short at the 618, the market made double bottom, then a triple bottom, then started working its way up. When you see this kind of momentum come in, especially on these kind of narrow channel trades, this is a very good opportunity to just exit at break even, or if the market moves enough. Let's see here, now it was only about 10 pips, wasn't quite enough to take profit. But when you see the market break back through the 618 level, this is where it's an opportune time to just get out. You can see the market came back up here to the double top and has moved off slightly. So at this point, again, that's why these types of trades are very tricky. It's why this is more of an advanced trade, and I don't highlight these because the entry points move around, and you've really got to be watching the market. But if you can watch the market, these types of trades can be very profitable because they offer very low risk. For example, entering here and stopping out above these highs is only about a 17 pip risk, with a potential reward here down to about just below the 2.0120 level of 30 pips. So you can see here you're still at about 2 to 1, but you have to be very fast and you have to be willing to get out as soon as the market breaks above these two highs here, or above the line. So anyway, that's the setup for now. We'll have to keep an eye on what's going on with the market. In a longer term sense, I'm keeping my eye on this steep trend line here, because if the market breaks, we might get an extended move down, possibly into this level down here, about 2,100 or 290, to catch support again.